The finance minister is ready for yet another budget this Saturday, and so are the markets. Let's quickly revisit what the pre-open rates are doing. Actually, absolutely nothing. But that's typically been the move, right, in the markets, that the big swing is only going to come in post that 12 noon session. Maybe today not, because global markets are not working, so I don't know. But yeah, it's immaterial the way the markets open nowadays.
Yeah, it really doesn't matter, because this is again one of those budgets where expectations are actually low. Markets are light, expectations are low. Nobody's expecting anything big bang. So unlike this whole theory that there's a pre-budget rally, barring yesterday, there has been no large pre-budget rally in any of the sectors. So the market positioning in the run-up to the budget is uniquely different. And then you have this whole Saturday element. Who's at office, who's not at office. The fact that institutional investors may be at bay, that could have different dynamics, and then we are beginning of an expiry. So there are a lot of dynamics which are at play right now in terms of market, which in a sense would be the differentiating factor on what could be called as a working budget Saturday for the markets and for everyone. Sandeep Tandon joins us now. So what should we expect today? Markets up or down?
So I tell you, let's look, as you explained, Nikunj, we are getting into budget with very minimal or low expectation, and the good news is the leverage is also very low, okay? So the background is very easy, because I don't see you can see any sharp reaction, okay, because very, very light. Rather, I will say if it is slightly positive also, you can expect slightly flip there. But I think what we have to watch from the, if you look at Mr. Modi's body language, very affirmative, very assertive sort of thing, which means some sort of determination is there from the government to do something and boost consumption. So I think I will play as a consumption theme, okay, and I'll talk about renewable theme, talk about larger infra, which can cover many things. So I think I'm
been
more
watching
optimistic.
ET now. Because we've been saying the same. You've been watching ET now, that means.
Yes, of course.
He's been saying the same on ET now. Let's put it like that. But tell me, a consumption fillip, I guess, is going to be via reduction in taxes. Will that be enough, Sandeep?
If they do meaningful, yes. See, one side you cut down the taxes, and other thing you can get benefit of GST, if the consumption moves up. So it's if they want to demonstrate something, I think this opportunity is there, and I think we need that support at this point of time. And if you really look at a lot of people take, pro-consumer or pro-social budget sort of thing consider negative. In this context, I think it will consider positive.
I think that's the need of the hour.
Yes.
Sandeep, you also have been, two Sandeeps here, but you also have been observing these FMCG, white good, brown good companies, right? And any basket of stocks that you would recommend right now after the recent fall that's happened?
See, what will happen is that a tax cut is immediately more positive for durables rather than non-durables. Sure. Like non-durable demand will get impacted if there is some tax positivity, but then they don't fall that much also. But in case of durables, tax cuts have a direct impact because more money in the hands of consumers leads to more demand. So on one side, durables, you have autos. So in autos, you can play Maruti, Bajaj Auto.
I'll come back to you. Markets are about to open. 5 seconds literally, and the bell has started. So I'm just going to again walk up to the ball and perhaps capture first the basic rates, the small cap, the mid cap, and the Nifty. Remember, bear in mind that yesterday we did get a good kind of a move from the market. So it's a green and there is a red. But what I like about the market is the market breadth, which for me I think is the talking point, which is 1470. So the market breadth is off to a good start. The bank Nifty rate, it's a Saturday, folks. Please bear in mind, some rates may slow, some rates would be moving up. Now, if the theme is consumption revival, that is a theme which markets latched on to yesterday. Nestle, HUL, ITC, Dabur, Britannia, Maruti, Bajaj Auto, that entire cohort of consumer stocks yesterday was in demand, and they are off to a good start. So the good classics, as we call them, FMCG, Sasta Sundar Tikau, bottom end of the pyramid, that is off to a good start. Autos, it will start with two-wheelers, it will move to four-wheelers. By the way, there is a news on Hero MotoCorp. Ranjan Gupta is out, and there is a new acting CEO there. So how Hero MotoCorp is reacting to that bit of news also would be very interesting today. And then we move on to the CAPEX, good old CAPEX, defense, railways, infra. Defense, railways, infra, that would include all the defense stocks, all the railway stocks, all the infra stocks. That includes, this is like the whole host of, some of the defense and combination of infra names here. Now, as we move on, we also have what could be called as a budget wall. And in the budget wall, we pretty much would be capturing that what some of the other budget themes are. But for the moment, it is a fair statement to say that we are off to a stable start, and markets are pretty much picking it up from where it left yesterday. So what will it take, Sandeep and Sandeep, for the bears for the bears to get scared? Right now the bulls are feeling scared. I mean, so much so that Sandeep Sabharwal today is wearing a bullish tie to identify himself that मैं bullish हूँ.
Nikun, the way I will put in the market, I look at more from a risk appetite data that will give you a fairly good perspective, because risk appetite has a direct correlation with the mid and small cap. Okay, risk appetite which has started declining from July 2024. Okay, and it gathered momentum from September, October. Now, if you really look at, we have already covered in terms of the bench, the cycle which we look at, or in terms of the ranges which I look at, is already covered 60% of the journey. What is left now is around 40%, which means if I have to extrapolate that, it means maybe by March end or beginning April sort of thing, the cycle of risk off should peak out, and which means a great buying opportunity can emerge. But that does not mean that everything looks bad right now. I think if we look at the individual stocks rather than sector, I think multiple stocks have bottomed out. Their risk appetite cycle has already bottomed out. I think look at opportunity. So I think it's a stock specific year, and rather than looking at the sector also, I think now looking at the broader themes, I think a very stock specific opportunity, and that's the way maybe 2025 would be.
Sandeep, you were finishing your point about consumer durables, and if there is more money in the hands of consumers, that's the first sector which will have the cascading impact.
Yeah.
Because we have had 2 years of downturn also. So then there is a basket of stocks there. So there's companies like Crompton Consumer, there's companies like VGuard, there's companies like Voltas, there's a Havels. So I think there are a large number of companies. All of them have seen decent sell-offs because the growth has lagged behind. And I think many of them, so I think here we might see a direct impact if there is a decent tax incentive. If it's just minor tweaking, then it won't have much impact.
Okay. The Bank Nifty is off to a good start. Actually, it's turning out to be a very, very decent start. It's turning out to be a decent start. So Monday morning when markets will open, once today's budget reaction is over, will budget be a forgotten story? Will it be back to Donald Trump, tariffs, China, Korea, everything? Or this budget could have a prolonged impact? Like 2021 when the budget came, it had a prolonged impact for an extended period of time. It kick-started the expenditure cycle. Could this budget kickstart that for consumption stocks? That's what I'm trying to understand.
Maybe. If it is something really drastic comes from the government side and they're able to demonstrate that they are committed to revive the economy, then I think it can last longer. But if there's a disappointment, like Sandeep was also mentioning, if that is the case, then it could be just one-day event, and then you go back to the normalcy, to the global markets and the corporate developments.
But Sandeep, the global market construct, the kind of FI selling that we are seeing right now, you think that's going to take away from whatever 2025 could bring on the table for us?
So let me answer this question in a different manner. Again, linking with FIs. The current context, if I look at my vulnerability is less in India, and at the way we look at global market, vulnerability is more in US. Okay, we believe good amount of complacency is there in the US market, and hence vulnerability is high. Which means, for whatever reason, if US market corrects a lot, let's say correct 15-20% sort of thing, which I'm not ruling out, then good money can also shift back to India. Okay, and again you look at if I look at the pure FI data, I think some sort of selling exhaustion is visible now. Okay, now it's very difficult to pinpoint it will happen in next 2 days or 2 weeks, but we are reaching that stage where selling exhaustion signs are visible, and hence I think there will be slowdown in the selling whatever we have seen so far in last many months.
Okay, I'm just going to walk again, and Sandeep, your magic box is ready.
Yeah.
You're going to shake that magic box and perhaps get, what is called mutual fund buying, right? We're going to figure that out from you, right? Okay, so I'm just going to go and talk about the Simsim, and this is I love this. Aisha, jab chote hote to kehte jadui ka pitara. Every time you would shake something, something would come out. And for our viewers, it's about stock ideas. So that's what Porinju has bought: Indage, Proteon, and Exico. Let's look at what Sandeep Sabharwal has. Bajaj Finance. Okay, Madhusudan Kela is going to be coming later on. But we've opened the magic box right now. We'll go to Madhusudan Kela later on. But right now it's Samir Arora. He's got HDFC Bank, large cap IT, and Zomato. Sandeep Sabharwal has got L&T, Bajaj Auto. There you go. L&T, Bajaj Auto, and KEC International. Now it's time to shake the magic box and get one more idea, and this is coming from Sandeep Tandon. And do you want to guess what it has? It's your magic box, but I've guessed what the content is. Am I right in saying this? That these are some of the outsized bets of quant mutual fund?
Yes.
There is no magic now.
Grasim? I want to start with why Grasim. I understand Reliance and FMCG.
See, this year themes is all about large cap and mega large cap, okay, and all these name fits very well in that thesis. And I try to identify which are the stock which has been neglected for a while. So all erstwhile neglected actually has bottomed out now. So there's a thesis which we are looking at, and the last year admired territory stock will gradually or logically underperforms now. So it's again large mega cap stories which we are looking at.
And Reliance, perfect value zone right now? Or do you think finally something on the demerger, some value unlocking? Are we going to hear anything
So
of
I
that
generally
sort?
look at not as a terminology like value, we define as a neglected territory.
Achha,
So it's
okay,
a combination.
neglected,
It's a
ignored.
combination of because we blend our fundamental data with the behavior data. So it has Reliance has reached a neglected phase. Okay. And it's a great opportunity for so we identify stocks at the inflection points. Anything which is the neglected territory, either the most admired zone or most hated zone. So most hated zone we are able to pick it in terms of buying opportunity, and the most admired territory stocks we like to exit. So is the case with FMCG also. So all FMCG stocks at some point in time used to be darling of the market. They have now trading actually in a neglected territory. So it's an opportunity for us.
But again, FMCG is a very large play, right? You've got some of the MNC players as well over there. You've got some of the premium consumption trends as well. And then, of course, you know, the rural plays. What within FMCG do you like?
So I think we have tried to play as a basket approach. And I also believe that rural economy after 4 years has bottomed out, is showing early signs of recovery. So maybe all those companies which are also skewed towards rural SS space. So those are the names which you're looking at bigger opportunities. Staple could be one of them, food companies could be one of them, and maybe combination of some of these names.
Sandeep, the other theme I remember, and last year were very vocal and very bullish about, was the entire PSU theme. But if we just look at the PSC index, I think that's where the first signs of selling came in your defense, railway, you know, all those frothy names.
Yeah.
What happens in the months to come with the entire PSC theme? And let's specifically talk about defense and railways first, and shipbuilding mainly.
So I will say in last 4 years, why just only 2000, not only 2024, actually this momentum started right from 2020, okay? Yeah. And if you really look at in June, July 2024, that easy phase of bull run peaked out, okay? And all those stocks which were obviously PSU stocks and the railway or banking names, even PSU banks have done extremely well, railway, defense, all those cycles have actually peaked out from a medium-term perspective. I'm not saying they have peaked out from a longer-term perspective, because I still believe this decade belongs to value as a thesis, and all these PSU stocks qualify for value. But within that larger uptrend of secular bull run, which is talking about a decadal opportunity, you will see downtrends also. You will see good amount of cyclical down moves also, and which is the part of right now where we are going through a correction and consolidation phase. In fact, we also pruned down a very large exposure in some of these PSU in the month of July. June, July. I think June we closer to the budget. We also do it. I think we are opportunists. When we look for opportunity, I'm confident this is a great area because valuations are in your favor. Under ownership exists in a big way, and you have to time it from to generate superior risk-adjusted returns.
Sandeep, the budget is typically always linked to the capex, right? And that's one big figure that we're going to be all watching out for. Other than L&T, what's a good way of playing this theme?
So I think capex benefits companies in the infrastructure capital goods side, or also like Sandeep was mentioning, the defense theme. So the defense theme longer term obviously remains intact. Now it depends on various cycles. The problem of government funded companies always is that sometimes there's a sudden slowdown, sometimes they stop spending, sometimes you don't get money in time. So I think all those risks you need to build in. So I think there are many companies on the construction infrastructure side which could also benefit. Now the key is that they need to actually do what they announce, because this year's capital expenditure targets are going to be hugely undershot because they have not been spending. So how they do the actual spending will determine how those stocks will do.
But that's because this last year was an anomaly, right? Because of the state elections.
Yeah, but even last 2-3 months, the government spending has been pretty low. So we need to see how it goes.
What would be one theme which you would say could be the make or break theme in this budget? When I say, I go back to that point again, I'm just breaking it for our viewers, Aisha. Government was always bothered about fiscal deficit, and they were always very careful about maintaining a balance between fiscal deficit. Post-COVID, the NDA 2 comes out and says that, look, we would go on a binge of capital expenditure. That number went from 1.3%, 1.4% of GDP to as high as 3.5% now. So post-2021, Sandeep, PSU stocks, PSU banks, defense, road, railways, power, they had hit a home run. What could be that theme in this budget? It may not happen in terms of impact, but it may happen in terms of thought. कि सरकार ये सोच रही है, सरकार ये करना चाहती है. Because they say in the market that wherever the government goes, please reach there before.
So if you look at the maths, obviously maths says that if they have to maintain the fiscal deficit, the room is very limited, okay? But that does not restrict government, in showcasing a larger perspective, this changes which we can implement. And frankly speaking, in the context when slowdown is there, is visible, and so is the case in post-COVID also we have seen. I am of the opinion, sometime if you have to expand the economy at the cost of fiscal deficit also, it makes sense. It's not necessary, it does not make always sense that to follow these things. In fact, I'm looking at the background of rupee also, when global currencies, particularly both developed market and emerging market currencies have depreciated. It means I don't think one should be too much bothered, okay, purely from the rupee perspective and the global perspective about India. If the need of India is that to infuse whatever needs to be built to increase the consumption, I think one should take that step. And it doesn't make big difference if you are missing the target by a year or so. It does not make big difference in the larger interest.
So they're talking about consumption. One end, of course, is the beaten down or neglected. No, what did you say? Ignored. Neglected, yeah. FMCG space, right? And largely led by some of those rural players. The other curve has been the urban consumption theme, your travel and hospitality, branded retail, aviation stocks as well, I would club in that. And especially after the recent correction, do you think there's meaning in perhaps adding positions in that entire cluster?
And I think the economy also has been very K-shaped. If you see how hotels have been doing, how aviation has held up, they actually continue to do well, while the entire branded apparel space, like you said, even for companies, let's say a company like Vedant Fashions and all. So they were very bullish last quarter on how the entire marriage season will go, but they were also very surprised that the urban consumption seems to have completely not picked up at all. So I think that's the reality, and that typically comes after a phase of high inflation. So years of high inflation ultimately in the subsequent years does impact consumption patterns. So that's why the fiscal expansion is necessary, because government is the lowest cost borrower in the system. Like today 10-year bonds at 6.7%. It's hardly a cost for them. But for any private individual or company to borrow is much more expensive. So it makes sense for them to invest now, kickstart the economy, and then the private consumption and everything will take over. Because see, without consumption, nothing can happen. You might keep on investing, but finally everything has to be consumed. So if consumption keeps on slowing down, then the entire system can go sort of out of rail.
Lot of food for thought, Sandeep and Sandeep. Thank you, both of you. Thank you for your time as always.
If you like this video, then like, share and subscribe to ET Now.